Welcome back, everyone. I'm Severino, your personal business coach. And today I want to accelerate your path to financial freedom by sharing with you my newest insights in assets so that you can cut the time. I've done so much research, you don't need to do it in that length. You can build on my research and jump off from there. I'm Severino, marketing and sales coach, and today we talk about all the money that you made in marketing and sales with our help, how to invest it in assets. And the assets that I'm sharing with you today will be a surprise. So our current portfolio is right now at $1,075,000. The plan is to double every 3.8 years. We are now at our fourth doubling. It's 2024. We are on track. And the next one will be 2028. Will we make it? Let us know in the comment. The target portfolio is made of the companies that will own the most relevant data, that are capital light, so that they have a lot of optionality and predictability, and have pricing power, because pricing power is the most important thing on the planet. This company has pricing power. They're the biggest asset manager under the sun, actually. But Simon, a traditional financial company, isn't that outdated, non-innovative? Well, let's find out, guys. So the first check has made them a jackpot, except for one thing. Let's have a look at it. Are they data owners? Yes. Do they have pricing power? Yes. Network effect? Yes. Capital light? Yes. But for their buyers, there's not a lot of switching costs. You can switch your asset manager anytime. Let's look at the numbers. What about the free cash flow per share? What about the operating income? What about the return on capital employed? And Simon, are you buying them? Are you selling them? Are you holding them? Let's find out. So BlackRock manages 10 trillions in assets, which dwarfs number 2, which is Blackstone, with 1 trillion. So we have a 10 to 1. And you remember the 10x better, be 10x better. So this is literally 10x more volume in asset under management. And that is feedback, because the core feedback, if you're an asset manager, is how many assets do people want to have invested for them. And also the business model is genius. So first, they manage 10 trillion. The second best, Blackstone, manages 1 trillion. And the third best, Apollo, 600 billions. So you see, the dominance is massive. Second, they will make money in any market, in a down market, in an up market, they make money. What was this book? I was laughing so hard when I saw this book. The book is called Where Are the Clients' Yachts? And basically it says, okay, you guys are all making this yachts money, life-changing money, and where are your rich clients? Basically, the clients have a normal life, but the wealth managers have these yachts, meaning whatever happens in the market, sometimes your portfolio may be down, but they always make fees from managing your money, whatever happens. Even if the performance is terrible, they will make a lot of fees on their way there. So it's a strong business model. Negotiating power is huge because of that volume and because of that positioning. The data advantage is huge. Network effects, really, really strong. And especially, I like the platform Aladdin, which is a sophisticated risk management and trading system that many investors, traders use. And the network effect is, as more clients use Aladdin, its data becomes richer and its insights become more valuable. So attracting even more users. So in the fight, in the war for the most relevant data, BlackRock is one of my finalists, actually, because I think their data will get better and better over time. Aladdin has become an industry standard. It's used already right now by the world's largest asset owners and managers, or just Aladdin alone. And this widespread adoption creates switching costs for clients and reinforces BlackRock's competitive advantage. So maybe the switching cost component, which right now I've rated as a negative, can become actually a higher switching cost. We will need to see if people say, no, I'm not switching because I would miss Aladdin, which I cannot get the data in that quality, in that richness, in that speed somewhere else. If I hear that, I didn't hear that so far, but if I hear that, then it's a full score for BlackRock. Let's look at the numbers. We want to see free cash flow per share going up. It's going up year over year. We want to see operating income, so we know they have cost control. Yes, it's a well-managed firm. And we want to know the return on capital employed, and that's also pretty good. GF score is 94 out of 100 with strongest profitability growth and momentum. And the fair value is at 757, which is exactly the current price at the moment of this video. In Q1 2024, it has been bought by 3 super investors with a very small amount. So super investors don't love BlackRock. 87 million is nothing, because we're talking of Jim Simons, Ken Fisher, and Joel Greenblatt. For them, 87 millions together is spare change. We're talking less than 1% in each of their portfolio. So they don't really love it. But the fact that it has made it and passed through their analysts' screeners, that alone is maybe validation and can help us shortcut our due diligence process. So I hope this video has given you some information that you can use. We are also having a workshop soon about your pricing power. So you can join us for a 60 minutes free workshop where I help you strategize ways so that you can increase your pricing power. Being a small team, even a solopreneur, you can increase your pricing power by doing 6 things that we will do live together in the workshop. So if you need a higher pricing power, see you there. You find the current dates always on X at Simon Severino. Keep rolling, everyone.